We've had a very good run in financial shares since Kokkie Kooyman, one of the founders of Denker Capital, told us it was a great opportunity to be buying into financials. We've got them loaded up in the BizNews portfolio. But now, where do we go to from here? It's a new year. It's a new opportunity or not. Kokkie will be giving us the insights in just a moment. Well, I hope there are many in our tribe who are singing your praises, Kokkie, because I certainly am. When we added the financial shares, or the banking shares in particular, into the BizNews portfolio, I wasn't 100% sure that they were going to perform as you told us they would, but they have. And the banking shares now are still very strong relative to what others have done in the past year. But I guess as I mentioned in the intro, the story is, where to from here? We've got higher interest rates. You've told us this many times, but I'm going to ask you again, are they good or bad for banks?
No, firstly, just if you look back at last year, Alec, and thank you very much, you're quite right. The bank shares on average last year did make it 25, 26, 27%. Investec was the best. Netcore actually also did quite well. And in fact, not to be forgotten, the insurance shares lagged. And if you might remember, at the end of last year, I said, I think in our last interview, it's interesting that the insurance shares have lagged and they might actually perform better in 2023. And actually, just in preparation for this meeting, I just had a quick look. And so far, year to date, I'm actually surprised. I didn't see that until now. Year to date, Sanlam is up 19%, MMI 15%, and Old Mutual 11%. So whereas the banks are up so far year to date, let's make it 6%. So the insurance shares have had a bit of catch up. Maybe at the end must come back to on the going forward. But if you look going forward, it's interesting. I just saw the bank lending numbers for December come through, and it's quite interesting that loan growth, despite all our negativity about South Africa and what is happening with load shedding, Eskom, Transnet, harbours, policing, loan growth was still around, make it 12%. Capitec once again the strongest year on year, 18%. And Nedbank the weakest, 5% growth. And you can see when you drill down into the various segments that the Nedbank number is still being held back by, you recall, they went into the COVID pandemic with a very big weighting in their lending portfolio to commercial real estate. And obviously that section has just been contained and almost, as I say, in India, de-grew, negative growth. Yeah, nice Indian word. So Nedbank lagging a bit, as just because of that large part of the portfolio. But it's interesting that loan growth is still fairly strong. And if you look forward towards this year, it is still the story that it seems as if the private sector is almost, it's deprivatizing the government, or it's privatizing the government without the government actually wanting that. If you look at just there's a rand value of batteries, lithium batteries that were purchased. I just saw a graph yesterday, actually, Gulam Balaam of Standard Bank showed that. Fascinating how lithium batteries have just shot the lights out as people and businesses are converting to all kinds of alternatives to Eskom. And that's obviously capital that is invested. And so it seems the big thing for the banking sector, and we spoke about that last year, is if we continue on this trend that the private sector starts investing in infrastructure, taking over from government, despite all the problems, but then there's actually quite a lot of opportunity for lending growth on the commercial side. So I think going forward, interest rates, in a nutshell, interest rates are close to having peaked, maybe have peaked. US maybe still 1 or 2 hikes left. With us, it depends on the rand. but the rand is also should strengthen. So we're close to the end, if not the end of the interest rate cycle. So banks have a good margin now, net interest margin. And if you still get lending growth of, let's say, again, 10%, remember inflation is about 6, so 10 is maybe even 8%, and fee income comes through, then the banks will have another good year this year.
Sure. There's a lot in all of that, Kokkie. Just to unpack very briefly, the privatization of the electricity sector is a huge story there that you've just unpacked. And I know personally, we went to a home which we're renting, which does not have any solar panels or really didn't have much support. So what did we do? We went out and bought an inverter. And that's just one family. Now, if you think about our business in Johannesburg, we've been spending thousands of rand a month on diesel for the generator. If it was our building, or if you're the landlord there, what are you going to do? You're going to invest in solar panels, etc. So it's almost like despite ourselves as South Africans, and many South Africans are concerned about where the country's going, we have to do the investment into this area. And who wins? The banks, because they're the ones lending the money. What a fascinating insight you've just given us.
Yeah, no, and you can just see that in everything that's happening, and you're spot on in terms of what the private sector. But now remember, now we are able in the Western Cape to sell electricity generated back to Eskom. Okay, the price still has to be fixed, but it can become even your excess electricity you can feed back. And then we might even get a tax. Well, it looks like we're going to get a tax benefit from investing as well. So, yeah, it could be quite a big thing. But I think not only in that, in a lot of other things where the private sector is taking more and more initiative to invest. And that's capital investment. That's good for your banking sector and good for just confidence in the country.
We had a series, a sponsored series with Standard Bank early last year, called Power Pulse, where they saw this ahead of time, and they were actually explaining to our tribe, and I guess to the community at large, how that bank had been focusing on helping you as a business to invest in renewable energy, not even taking into account the benefits that you're talking about of selling back into the grid. But this is a big story there, I guess, from the banking point of view. But there's, on the other side, Kokkie, we've had the rand that has fallen out of bed. I looked at the numbers this morning. In March last year, we were sitting at 14 Rand 50 against the dollar. We're 18 Rand today. How does that affect banking profits in South Africa?
Yeah, well, the two effects. Firstly, those banks with operations outside of South Africa, let's say First Rand, who've got the business in the UK, obviously get a direct benefit from the currency translation. The same with Absa and Nedbank and Standard Bank, who have African operations. But that's more difficult to judge because now you've got to do the aggregation of all those different African currencies. But I think the rand has fallen more, so there's a benefit. But the big negative benefit that they get is a falling rand means more inflation. It means that interest rates have to go higher to protect the currency and to curtail inflation, and that's really where the benefit has come through in terms of just that higher interest rate. And as long as the rand is weakish, the central bank will keep interest rates high. But for the rest, the longer interest rates stay too high, then it becomes a negative for the bank sector, because then you start getting bad debts. It starts retarding loan growth. But that's why those loan growth numbers were so important to me, that you can see for the moment, the loan growth is still make it on average 11% year on year, and expected to be more or less the same, maybe slightly weaker. Well, that depends on the capital spend. Interesting also, it's the non-retail loans that were stronger. So that's commercial loans, which means either working capital cycle or investment in maybe it's just on electricity and infrastructure, but retail was on average make it 8. Mortgage is still 8%, interesting, very strong. Installment fund 8, but it's the non-retail loan, so the commercial sector that's lending, which is a good one.
So the businesses are actually showing some kind of confidence in the future, although maybe it's just a boermaker plan. You got to get electricity. So
You're right.
What about grey
Yeah.
listing? That was the big story as we got to the end of last year. February, this month, we're supposed to hear whether South Africa gets grey listed or not and the impact thereof. Have you got any more feedback on that?
No, not really. I mean, the same as we said last year, the government actually has made progress, and it looks like all the voices that were raised and spoken to various levels of government seem to have worked. A lot of the legislation has been speeded up, and it looks like I'm always more of an optimist. It looks like we could avoid it, but even if we don't, then it's for a year. And as the bank CEOs have told us, they have been obviously talking to all their correspondent banking partners, and so everybody's aware of it. But gradually, it will increase your cost of capital. But I think, Alec, if you just look at the size of the problem we have with Eskom, with Transnet, with policing, I think grey listing is the least of the problems. Let's the impact of Eskom and water, and so will be much bigger on South Africa than grey listing. But don't ignore it. But I don't think it will be much of a noticeable effect.
Thanks for the context on that one. Moving on to other markets, and in the BizNews portfolio, we added, again on your advice and supported by Sean Pesh, a ETF, the iShares MSCI European Financials ETF.
Now you're talking.
Help us there, Kokkie. Give us confidence or tell us to sell.
No, look, the European bank shares have shot the lights out in the last 3 months, and I see even Sean's favorite ABN AMRO suddenly jumped 12% on one day, and there were 3 factors that have driven that, and it's very important also for us going forward. Number one, they were very cheap. They were all trading at between 0.3, 0.4, 0.5 price to NAVs. And it's interesting if you look at their net interest income over the last 12 years, and it's a fascinating table. I would have loved to have shown it here, but most of the European banks lending their loan books have grown by, let's say, 50% to double over the last 10 years, but the net interest income is flat. And over the last 10 years, so you can see that increasing every year compression of your net interest margin. And suddenly in 22, that net interest income jumped 30% because of the higher interest rates. And so the banks are like coiled springs in Europe. They've been cutting costs, improving efficiency the whole time. And suddenly when interest rates started rising, it just came straight through to the bottom line. So you firstly had in 22, the second half of the year, the ECB starting to hike rates. And remember, they only started hiking later than the Fed. So the effect of those interest rate hikes will still come through in 23. And also, there are still more hikes to come there. The US is almost at the end. ECB still more hikes to come. So the interest income growth has been very strong. And then thirdly, it looks like Europe will avoid a recession. The energy prices have come down quite a lot. Food prices have come down quite a lot. Also important for us, if the rand was to stabilize, we'll see deflationary pressures coming through. And obviously, that's quite good in terms of unemployment, which is still very, very low in Europe. So you're still looking at a bank sector that is very cheap, not as cheap as it was, but and the upside is not as gigantic, if I want to call it that, as it was last year. But it's still very good upside. You're still getting dividend yields of 5-6%. And I think the most important aspect in Europe, and here to a certain extent as well, the returns on capital Europe are, let's say, 12, 10, but loan growth is still only 2%. Here we've got loan growth of make it 12, but returns on capital is 18. So you've still got free cash flow generation, which the banks are paying back to shareholders via dividends. So your dividend yields in Europe and here are still very good. So Europe, I think there's still more to go.
Is there any individual stock in Europe? You mentioned ABN AMRO, which is Sean's favorite. What would be the one that you'd be investing in of the European shares right now?
Yeah, in our global financial fund, our three largest holdings in Europe, are Swedbank in Sweden. It's well, there are three large banks, but it's one of the largest, and it just came with stunning results with net interest income rocketing up 30% and more to come. Very safe bank. It's 80%, 70% of its book is mortgages, and the loan to values on those mortgages is about 60%. So it means it's a huge, a buffer for safety, and it's generating a return on capital of about 17%, and it's very mispriced. There's another one that investors missed out on in Europe, BAWAG. Never heard of that one. BAWAG. It's a bank in Austrian bank that has been gradually buying, failing other operations and then bolting them on. And that's a strategy we generally don't like, but these guys really know what they do, and they've been doing it for 10 years, also still mispriced. And then something like Erste Bank, so that's done really well, but you're running the Russian risk. And the laggard has been Société Générale, SocGen, still very cheap, but France doesn't benefit. The French retail sector means it doesn't benefit as much from rising interest rates as the rest of Europe, but it's still very cheap and gradually it will catch up. So, all of those are still very mispriced. And then you've got the Greek banks that are suddenly coming through. And Pesha should go and look at Piraeus in Greece.
We spoke about it last time, Kokkie.
That's
remember?
Right. I know. See, I listen to you and I go do my homework. So, but
still
in
value
Europe,
there at Piraeus?
It's actually done well. It's actually, I think it's almost doubled. But if they execute on their plans, and remember, you come from such a low basis, it's almost like Greece is a bit like South Africa. If we were to have a government that suddenly involves private sector, and that's really what the Greek government has done. It's a new government that's moved over to being from socialist to capitalist. So they're privatizing the airport, they're privatizing a lot of other state-owned enterprises, they're selling the bank shares, so that brings the deficit down, it brings the lending, the debt of the government down, and it unleashes the private sector. And that's really what's happening in Greece, starting to happen. So if they execute, Piraeus, I think, is still on haven't looked, the price is moving so fast. I think it's 0.4, 0.5, but it could go to it could still double. And that's really what you're seeing in Europe. There's a lot of pent up, still potential that could come through. But the price moves have been big. So I wouldn't expect the same immediately. But if you, as a long-term investor, take a 1, 2, 3 of you, you're going to do well there.
Kokkie Kooyman, before we go, Kokkie, I spoke with Richard Quest, the most recognizable business journalist in the world. Last week, he was in Cape Town, and he was saying that South Africa, he was referring to the energy crisis. Being the kind of person he is who flits all over the world, he said South Africa should be looking at the best practices elsewhere in the world and bringing them here to solve the electricity crisis. But what you've just said now is maybe South African government should be looking at Greece and seeing what the rebound potential is for an economy when you move from the socialist model to a free enterprise model, and start taking a few hints there.
I've tried a lot of the ex-CEOs of banks and insurers that are involved with government and advising government. I see them as often as I can, just to hear also the feedback from what they're seeing, and just to give these hints. And I said the other day, take them to Greece and take them to a country like Georgia, take them to Indonesia, massive infrastructure plan led by government, but with massive involvement from the private sector. There's so many countries. With Mexico is actually with AMLO being a very leftist president, but has actually managed that economy very well. And but in those countries, the governments are have staked their reputation to growing the economy. And the problem with us is, there are other incentives that just detract from that. But you're quite right. There's so many examples that we could go to where countries have moved from socialism to capitalism, or even remained, like Mexico, remained socialist, remained very committed to helping the poor, uplifting the poor, but creating jobs and getting the private sector, standing out, getting out of the way, directing it, but getting the private sector to create the jobs.
So Hugo, the wonderful French author, said there's nothing new under the sun. We don't have to try and invent everything here. Kokkie Kooyman's given us some good ideas of we as voters, we the people, should be looking at these opportunities and egging on the politicians to also do their homework, because it is rescuable. South Africa is a fantastic country with fantastic people. We can turn it around just by learning from others. Kokkie Kooyman is a co-founder and director of Denker Capital, and our go-to man when it comes to banks and financial services. And I'm Alec Hogg from BizNews.com.